Hello friends, coming back to Accounting Standard 25. Use of estimates. Our paragraph number 14 in the notes. Keep the notes in front of you. You will be able to understand the chapter better. The notes have been simplified for easy understanding. All of you have studied that accounting standards apply to material items. Same is also applicable to AS 24, 25. This standard is also applicable to material items. Okay, significant item. Then now in the context of interim financial reporting, when you are preparing interim financial reporting, which can be for a period of 3 months or which can be for a period of 6 months or maybe 9 months, the materiality bears greater relevance. So it becomes more important in the case of interim period financial statement. Materiality with respect to use of estimate, there are two important rules. With respect to use of estimate, first thing, the estimate should be assessed in relation to interim financial data. The estimate should be whether it is material or not, whether an item is material or not, should be assessed, should be checked with respect to interim financial data and not with respect to annual financial data. Whether an item is material for this interim period or not, that is the issue that you have to check, and not whether it is material for the annual financial statement. Second thing is that, which you already know, in case of interim financial statement, we will require greater use of estimate. Then you will ask why? Why do we require a greater use of estimate? The reason is we don't have enough time. We have to try and prepare the interim financial statement as early as possible and provide it to the users of the financial statement so that they can take timely decision. So we don't get enough time to get all the information that is required to make the estimate. Hence, interim period financial statement would require more estimate as compared to annual statement. In annual statement, we get lot of time. Next issue is, should we prepare final interim period? What is final interim period? This is quarter 1, quarter 2, quarter 3, quarter 4. Let us say our financial year is 1/4/25 to 31st March 26 and the last quarter is 1st January 26 to 31st March 26. Should we prepare interim period financial statement for the fourth quarter? As far as this statement AS 25 is concerned, AS 25 says there is no need to prepare interim period financial data. Yes, voluntarily if the company wants to prepare, the company can do that, but otherwise not required from the point of view of AS 25. Why it is not required? Because the company is going to prepare annual financial statement. Company is going to prepare annual financial statement for the year ended 31st March 26. So in any case, the users are going to get all the information with respect to year ended 31st March 2026 and he will have all the updated information. So if an entity does not want to prepare last period interim financial report, final interim period report, then as per AS 25 it is not mandatory to do that. Now suppose the company decides not to prepare interim period financial statement, but then what it is supposed to do? Estimates of amount made in previous interim period. Whatever estimate you have made in the previous interim period, estimates are made every time. So if the estimates have changed significantly, the nature and amount of change should be reported in the annual financial statement by way of notes. So if there are any important changes in the estimate, that should be made and that should be disclosed in the notes with respect to annual financial statement. So change in estimate will get reflected in the annual financial statement. Next very important point is recognition of asset, liabilities, expense and income. What will be the recognition principle for asset, liabilities, income and expense? Very simple. Whatever recognition principle that we follow for annual reporting, whatever principle we follow for annual reporting, the same principle we will follow for interim period also. If you can recognize an asset or a liability or an income or an expense for annual reporting, you will recognize it for interim period also. Okay. Estimates of various items be made by considering one on year to date basis. So while making an estimate, the estimates are made on year to date basis. What is year to date? In the first quarter, the estimate will be made on 3 months basis. When I go to second quarter, the estimate will be based on 6 months basis. When I go to the third quarter, the estimate will be based on 9 months data. And when I go to the fourth quarter, the estimate will be based on 12 months data. That is called year to date. Hence, the estimate made in previous interim period may be revised in the current interim period. Very true. Estimates are made and estimates are revised because new information comes, new data comes. Okay, you will study AS25, AS5. If you have already studied AS5, you will understand change in estimates are made in the subsequent period when the information, understanding, law, okay, changes. So if you have made any estimate in the previous period, you revise it in the subsequent period and give the effect in the subsequent period only. Change in estimate will be adjusted prospectively. You can make a note here in your book, paragraph 16. Change in estimate is made prospectively. If there is any change in estimate, the change in estimate will be made prospectively, not retrospectively. I hope this is understandable. Okay. What about seasonal or occasional revenue? What about seasonal or occasional revenue? What is seasonal or occasional revenue? That means you receive these kind of revenue only during certain seasons or only on certain occasions. They are not regularly occurring income. They do not occur throughout the year. They occur in certain seasons or certain months. Like for example, if you are an air conditioner company, your majority of the revenue may come in the first quarter, April, May, June. If you are a woolen garment company, your majority of the revenue may come in the third quarter, October, November, December. Or occasional revenue means you receive dividend, but you don't receive dividend every month or every quarter. You receive only once or twice in a year in a certain quarter. Or you may have given your premises on rent only for some period. So you might get revenue only during that period. Or you might receive grant from the government only during a certain period. So these are called revenues occurring occasionally. Rent, example, dividend, example, royalty, government grant. So what is the treatment? The treatment is revenue which are received seasonally or occasionally, underline, should be recognized in the period in which they occur. Should be recognized in the period in which they occur. That means you are going to recognize in that particular interim period in which you are going to earn it. So for example, if you receive dividend in the second quarter, then you will recognize it in second quarter only. You are not going to divide by 4 and recognize it one fourth in each quarter. That will be wrong. Okay. If you are doing seasonal business, if your revenue in the quarters are like this, 10 crore, 20 crore, 80 crore, 15 crore, you will recognize 10, 20, 80, 15 only. You will not take total and then divide by 4 and try to apportion equally. It will be recognized in the respective interim period only. They will not be anticipated. They will not be preponed. Because you may think that we are going to get more revenue in the third quarter. So let us book some revenue in the first and second quarter also. You can't anticipate the revenue. Okay. Or you can't defer it also. For example, if you are an air conditioner company, quarter 1, quarter 2, quarter 3, quarter 4, the revenue of this quarter may be 150, this may be 100, this may be 30, this may be 10. So you can't transfer some revenue to the last 2 quarters. You will have to recognize as and when they are earned. 150, 100, 30 and 10. Some examples are also written for you for understanding purpose. For example, example number 1, sale of air conditioner will be maximum in the quarter ended 30th June. So you are not going to postpone the revenue recognition. You are going to recognize it in the quarter in which the revenue will be earned. Example 2, sale of woolen garment will be maximum in the third quarter. So therefore you are going to recognize it in the third quarter only. You are not going to prepone the revenue. You are not going to prepone the revenue. So that is how revenues are recognized. Now we'll take some question answer for understanding of the concept. Questions have been taken from study material, RTP, MTP, past exam and other reference books. Okay. Question number 4, A Limited expects to receive dividend income of rupees 100 crores in its investment in the quarter October to December 2011. So let us say this is quarter 3, October to December, and you are expected to earn 100 crore rupees in the form of dividend. It proposes to recognize 25 crore dividend income in interim financial statement of each quarter. Is this justified? Can we take 100 divide by 4 and recognize 25 in each quarter? The answer is no. Preponement of revenue is not allowed. Anticipation of revenue is not allowed. Revenue was earned in the third quarter. Hence revenues like dividend income are recognized in that quarter in which they are earned. You will also remember AS9, revenue recognition. AS9 is revenue recognition. Dividend is recognized when the right to receive the dividend is established. So when the dividend will be declared in the month of October or November, right to record dividend income is established in the month of October or November or December. Therefore, it will be recognized in the third quarter only. It cannot be equally apportioned over all the 4 quarters. So you will see the answer is also printed as AS25 revenue received seasonally, occasionally should not be as per, you will write as per AS25, comma, revenue received seasonally and occasionally should be recognized as and when they occur and should not be anticipated or deferred. Hence, entire 100 crore rupees will be recognized in October to December quarter. Come to para 18, unevenly incurred cost. Cost which are incurred unevenly. That is, some months there are more cost, some months there will be less cost. For example, let us say this is our financial year. There are 4 quarters. Some companies give training to employees in first quarter and it is a big amount. So they want to, suppose they have incurred 50 lakh rupees training in the first quarter. So what they want to do, they want to recognize 12.5 in each quarter. Can we do it? Can we do it? The answer is no. Or reverse example, suppose a company may incur, let us say, repair and maintenance in the fourth quarter. A company may incur repairs and maintenance in quarter 4, 100 crore. Now it wants to apportion 25 in each quarter. Can it do it? Can it do it? The answer is no. The test is, are you going to do the same thing for annual reporting purpose also? Are you going to prepone or postpone recognition of cost in annual reporting also? Had it been your annual reporting, if you're going to incur repair maintenance cost in the next year, will you anticipate it and recognize in first year? No. Similarly, if you have incurred training cost in this year, will you defer it to the next year? No. What you will not do for annual accounting, you are not going to do it for interim period accounting also. So in this example, 100 crore repair maintenance cost will be recognized in the fourth quarter only. In the previous example, training cost of 50 lakh will be recognized in the first quarter only. They will not be anticipated. They will not be deferred. Now, very important, change in accounting policy. This is our year. Let us say these are 4 quarters. Okay. In the third quarter, there is change in accounting policy. Let us say accounting policy was changed from FIFO method to weighted average method. Possible. Accounting policy for inventory valuation was changed from FIFO to weighted average. So you are going to give the effect of change in accounting policy retrospectively from the beginning of the current year. So retrospectively means from the beginning of the current year. So you are going to change earlier year figures also. You are going to change figures of quarter 1, quarter 2, quarter 3 also. In the third quarter, if you are preparing P&L account for 3 months ended, suppose third quarter is ending on 31/12/2026, you are going to give effect of change of that quarter in the third quarter, and the total change, the total effect will be given in the year to date figure. The total effect will be given in the year to date figure because you are going to prepare 9 months P&L account also. So because of change in accounting policy, to the extent it affects the third quarter, you give the effect in third quarter, and in the year to date figure you are going to give retrospective adjustment. Okay. Now the student can have a query, what about the previous year interim data? You are going to give comparison of previous year data also. The standard says previous financial data is not required to be restated. Previous financial data that we give for comparison purpose is not required to be restated. Now we are going to take very important question from your study material. Also write down, also asked in past examination. Also asked in past examination, very important question, and we are going to solve. I have given the answer in your book. You will only concentrate on understanding, and as a homework, good student will solve in notebook. If you are a good student, you will solve in the notebook. Otherwise, enjoy life. Okay, institute will take care of you. If you don't listen to your faculty or teacher, institute will take care of you. I will explain because the answer is given. I don't have to add anything, but you will solve in notebook. Question number 5. Intelligent corporation is dealing in seasonal products. The quarterly sales pattern of the product is given below. These are the 4 quarters. For the first quarter ending 30th June, this is P&L account for the first quarter. This company gives you following information. Very simple question, only 4 lines. Sales, salary, other expense, advertisement, administration and selling expense. While preparing the interim financial report for first quarter, this company I Corp wants to defer 21 crore expenditure to the third quarter. They wants to defer 21 crore expenditure to the third quarter on the argument that third quarter is having more sales. So can you defer the expenditure to third quarter because third quarter has more sale? That is the question. Therefore, third quarter should be debited by higher expenditure. Considering the seasonal nature of business and that the expenditure are uniform throughout all quarters. Can the company defer? Please reply. Can the company defer expenditure to the third quarter? The answer is no. Suppose you were preparing annual financial statement. Will you defer expenditure to next year or third year? The answer is no. The same thing does not apply to, same thing also applies to interim period financial statement also. So you will say, sir, we cannot defer. We have to recognize the expense in the same interim period because the same expenditure will also not be deferred for the annual financial statement purpose also. First question is calculate the result of the first quarter, and second question is comment on the company's view. Students should also write on company's view, and the answer is company's view is not correct. Expenses cannot be deferred. So how do you prepare the financial statement? Preferably, you will follow vertical format. You will follow schedule 3 format for the P&L account like this. Turnover is 50. Add other income not given, nil. Total income 50. Less change in inventory not given, 0. Salary and other cost 30. Administrative and selling expenses 8 plus 2 10. So my total expense will be 40. Total income 50. Total expense 40. And therefore profit for the interim period would be 10. Therefore, profit for the interim period would be 10. Is it right? And then you have to write one comment also. This comment is printed below. I am not dictating. It is printed in the notes. As per AS 25 on interim financial reporting, the income and expense should be recognized when they are earned and incurred respectively. Underline. As per AS 25, cost should be anticipated or deferred only when it is appropriate to anticipate that type of cost at the end of the financial year, and costs are incurred unevenly during the financial year of an enterprise. So therefore, from the given paragraph of AS 25, it is clear that argument relating to deferment is not tenable as expenditure are uniform throughout all the quarters. So that was a very good question. Another very good question is question number 6. This question number 6 is appearing in your study material. Please mark it, very important. It was originally asked in November 2012 exam, and then it was also asked in November 2013 exam. Okay. So please, I request you to pay special attention for question number 6. Antar Bharti Limited reported a profit before tax of rupees 4 lakh for the third quarter ending 30th September 2021. So this is our quarter, 30th September 21, third quarter. On inquiry, you observe the following. So what you should do in the exam? You should start with PBT reported by the company. Now we have to check whether this is correct or not. So how much PBT they have reported? 4 lakh. PBT reported 4 lakh. On inquiry, you observe the following, give the treatment under AS 25. Dividend income of 4 lakh. Dividend income of 4 lakh received during the quarter has been recognized to the extent of 1 lakh only. Dividend income received during the quarter has been recognized to the extent of 1 lakh only. They should have recognized entire 4 lakh. It cannot be apportioned equally over all the 4 quarters. So dividend income is recognized 1 lakh, should have been recognized 4 lakh. So this profit 4 lakh is understated. The profit 4 lakh is not correct. Instead of recognizing 4 lakh, they have recognized 1 lakh. So you have to add dividend. Additional dividend, you have to recognize 3 more. 1 is already recognized. 3 they have not recognized. So 3 you should recognize, you should add. 3 is the rectification. 4 minus 1. Second point, add 80% of sales promotion expense of rupees 15 lakh incurred in the third quarter has been deferred to the fourth quarter as sales in the last quarter is high. They have incurred promotional expense of 15 lakh. 80% of that they have deferred, which means they should have recognized expense of 15 lakh, but they have not recognized 15 lakh. They have deferred 15 lakh into 80%. How much is that? 12 lakh. 12 lakh. They have recognized only 3 lakh. That is right. But 12 lakh they have deferred to the fourth quarter is not right. So you will have to deduct, because this is expense, less sales promotion expense. Sales promotion expense. Wrongly deferred. 12 in bracket because profit will be reduced because of this. Point number 3, in the third quarter, the company changed depreciation method from WDV to SLM in the third quarter, which resulted in excess depreciation of 12 lakh. The entire amount has been debited in the third quarter, although the share of the third quarter is only rupees 3 lakh. Now the question is, what will you do? The company changed depreciation method from WDV to SLM. Think about it, which resulted in excess depreciation of 12 lakh. The entire amount has been debited in the third quarter. The entire amount has been debited in the third quarter, although the share of the third quarter is only rupees 3 lakh. Although the share of the third quarter is only rupees 3 lakh. Yes, any answer please? Any answer? Change in depreciation, no effect. Change in depreciation, no effect. Write 0. Write 0. 0 is the correct answer. Why? It is a change in estimate. And if it is a change in estimate, we will give prospective effect. That is entire 12 lakh. Entire 12 lakh will be adjusted in the third quarter, and it is correctly adjusted. Entire 12 lakh should be correctly adjusted, and it is correctly done. So therefore, no further treatment required. It is correctly done. Answer is no effect. Some student may think change in depreciation is a change in accounting policy. It is wrong. As per AS 10, change in depreciation is a change in estimate, and it should be given prospective effect, and that is what they have done. If they would have taken only 3 lakh, then adjustment was required, but they have taken 12 lakh, so no adjustment required. You can refer AS 10, where it is given that change in depreciation method is a change in estimate. You can refer AS 5, change in estimate will be given prospective effect. So in interim report also, the entire effect of change in estimate will be given in the third quarter, which they have already done. Point number 4, rupees 2 lakh extraordinary gain received in the third quarter, it is a gain, was allocated equally to third and fourth quarter. So they have received 2 lakh. They have recorded 1 in the third quarter, and 1 they are postponing for the fourth quarter. So this is wrong. So extraordinary gain, 2 minus 1, you have to add 1 lakh more. You have to add 1 lakh more, because you should have recognized a gain of 2. You have recognized only 1. So 1 lakh increase. Point number 4, cumulative loss resulting from change in method of inventory valuation was recognized in the third quarter of rupees 3 lakh. Out of this loss, rupees 1 lakh relates to previous quarter. Out of this, 1 lakh relates to previous quarter. Okay. So what are you going to do? This is change in accounting policy. Change in inventory valuation method is a change in accounting policy. Please note down, otherwise you will ask me later. So we are going to give the effect only of that quarter in the 3 months report. And how much is the effect of that? Out of this loss, 1 lakh relates to previous quarter, 2 lakh relates to this quarter. So instead of recording loss of 2, they have recorded loss of 3. I repeat, instead of recording a loss of 2 lakh, they have recorded loss of 3 lakh. So by 1 lakh extra loss they have recorded. So I will add inventory valuation method. 1 lakh you have to add. Then the student will have a normal query. Why in case of depreciation we have given full effect in the current interim period, and why in case of inventory valuation we have only given the effect of that particular interim period? Because change in depreciation method is a change in accounting estimate. Change in inventory valuation method is a change in accounting policy. And in case of change in accounting policy, for the respective interim period, we are only going to adjust what is applicable for that period. In the year to date figure, we are going to adjust the full amount 3 lakh. But for the 3 month ended period, we are going to adjust only 2 lakh. Whereas in case of depreciation, the entire 12 lakh will be adjusted in the interim period. That is the difference of change in estimate and change in accounting policy. Change in accounting policy will be given retrospective effect. Change in estimate will be given prospective effect. Next point, sale of investment in the first quarter resulted in a gain of 12 lakh first quarter, and we are in the third quarter. The company has apportioned this equally to all 4 quarters. 20 divided by 4, 5 lakh, 5 lakh, 5 lakh, 5 lakh in all the 4 quarters. Now see the mistake. This 20 lakh should have been recognized in the first quarter. Instead of that, they are shifting it to all 4 quarters. So even third quarter has received 5 lakh rupees profit, which is not related to third quarter. So we should deduct. It is not the profit of this quarter. Less profit on sale of investment 5. This way you will identify what is the plus minus. If there is some typing mistake in your book or some correction is required, you can do it. Now let us calculate the net profit or loss of the quarter. Correct profit or loss of the quarter. 4 plus 3 minus 12 plus 1 plus 1 minus 5. So my God, there is a loss. So this is your PBT, okay, rectified. 8 lakh loss. In your book, if something different is written, please rectify. This is the correct answer. This is the correct answer. And the difference in the printed note may be because of change in depreciation. That was the old treatment. Under old accounting standard 6, change in depreciation method was change in policy. But under new accounting standard 10, it is a change in estimate. And therefore, this answer is correct. Okay. The answer is already printed in the book. The students are requested to please follow this answer, which is the correct answer. On the screen, the correct answer is appearing. You can just make the necessary changes in your book if required. Okay. Question number 7. Question number 7. Okay. Question number 7 is, Saurav Limited reported a profit of rupees 8 lakh for the second quarter, underlined second quarter, ending on 30th September 2014. This is a May 2015 exam question, very important. Students will note it as very important. And how much PBT they have reported? They have reported a PBT of 8 lakh. First point, property tax of 60,000 rupees paid during the quarter for the full year has been recognized in full. Property tax is an annual expense. Government charges you property tax for 12 months. So they have paid 60,000 and they have recognized in full. Property tax is an annual expense and it should be recognized proportionately over all the quarters. So therefore, instead of recognizing 60,000, they should have recognized 1/4 of 60,000. That is 15,000 is the correct expenditure. Property tax is not like dividend income. Property tax is an annual income and therefore it should be recognized on time basis. So instead of recognizing 15,000 expense, they have recognized 60,000 rupees expense. So the question is, what will be the treatment? Is the profit overstated or understated? The profit is understated. The profit is understated because they have recorded 45,000 rupees expenditure more than what was required. So what you will do, you will add 0.45 property tax wrongly recognized. 0.45 you will add. Okay, 0.45 you will add. Now next is 1/5 of the rupees 15 lakh being marketing promotional expense incurred on 23rd September 2014 has been recognized based on past experience of higher sale in the last quarter of the year. Now what they have done, they have incurred expense of 15 lakh like the previous question, but only 1/5 was recognized. Only 1/5 was recognized in this quarter, and the remaining amount they have postponed to the last quarter because they think last quarter will have more sale. Okay, so which means 4 by 5 into 15 lakh, that is 12 lakh is a lower amount of expense recognized. They should have recognized 15 lakh, actually recognized 1/5, 3 lakh. 12 lakh rupees expenses are not recognized. So this quarter profit is overstated by 12 lakh, less for, you will write marketing promotional expense wrongly recognized as 3 lakh instead of 15 lakh. So 12 lakh we are going to adjust now. Point number 3, 50% of the loss, 50% of the loss of rupees 2 lakh incurred on disposal of a business segment has been allocated to this quarter. Business segment loss is a one-time loss, should be recognized fully in this quarter, but they have only recognized 50% of that. So 50% of 2 lakh is under reporting of loss, hence we are going to deduct 1 lakh rupees more. Hence we are going to deduct 1 lakh rupees more, because instead of recognizing a loss of 2 lakh, they have only recognized 1 lakh. Loss of 1 lakh rupees was not recognized. So now we are going to recognize it. So less 1 lakh rupees loss on disposal of business segment. Loss on disposal of business segment 1 lakh. Point number 4, cumulative loss of 3 lakh. This is the same question we have done in previous one also. I am not repeating again. Resulting from change in method of valuation of inventory was recognized in second quarter, which included rupees 2 lakh related to earlier quarter. So you will have to add explanation given in previous question. In case of change in method of inventory, change in method of inventory valuation should be given retrospective effect, and for this quarter only you recognize what is relevant for this quarter. It says total is 3 lakh, 2 lakh related to earlier quarter. This 2 lakh related to earlier quarter should be recognized in the earlier quarter, which means 2 lakh additional loss you have recognized. So what I'll do, I'll add back 2 lakh loss on change in inventory valuation method wrongly reported in second quarter. It should be only 1 lakh, but they have reported 3 lakh rupees loss. Okay, so they should have reported not 3, they should have reported only 2, sorry, only 1. They should have reported only 1. So 3 minus 1, 2 you have to add. And once again, if there is a change in method of inventory valuation, it is called change in accounting policy. It is called change in accounting policy. So only for this interim period, whatever is relevant, you are going to adjust in interim period. Remaining amount will be adjusted in retrospective adjustment. Last point. I hope you are noting down because the explanation is printed in the book in detail. Gain of 15 lakh from sale of investment sold in first quarter was apportioned equally over the full year. 15 divided by 4, 3.75 gain, wrongly apportioned to second quarter. So what I should do? Add or less? Less. This is not the income of this quarter. This is the income of earlier quarter. By mistake, it has come in the current quarter as gain. It should not be included. Hence, now I'm going to write revised PBT. Explanation is printed in the book. A good student will take effort and read the answer. And today, as a homework, if you are really a good student and if you are really serious about your results and rank, then solve in the homework, in the notebook. In homework, solve in notebook without reading the answer. If this question is asked in your exam, how would you write the answer? First you solve, then compare with the institute answer and see if it is matching or not. So let us find out the revised profit. Take 8 lakh plus 0.45 minus 12 minus 1 plus 2 minus 3.75, and that is equal to 6,30,000 loss. This is a loss of 6,30,000. This was the correct interim period profit or loss. Very, very important question I have done. I have written the explanation also in the notes. Good student will read the explanation, solve it again. This is a highly likely question for upcoming exam. And see, this is the answer. You can check the answer on the screen. This is how you will present the answer in the exam. Very detailed, methodically, you have to write the answer. Now we'll go to question number 8. Again, very important from your past exam. Source write down. Past exam. Seriousness write down, very important. You will give it a status of very important question because it's a past exam question. ABC Limited has rupees 1,02,000 net income for the quarter ended 31st December 2003. So what you should do in the exam? Profit already reported is 1,02,000. Rupees 60,000 extraordinary gain. This is my quarter ended 31st December. Keep that in mind. Extraordinary gain received in July 2003 was allocated equally to second, third and fourth quarter. So 60,000 divided by 3. Second, third, fourth only, not first. 20,000 is wrongly allocated to third quarter. So less extraordinary gain. Wrongly allocated to third quarter 20,000. This should not have come in this quarter, but it has wrongly come. So you should remove it. Then next point, write down rupees 16,000 cumulative expense rupees 16,000 cumulative effect loss resulting from change in method of inventory valuation was recognized on November 2, 2003. Out of this loss, 10,000 relates to previous quarter. Again same adjustment. 10,000 loss relates to previous quarter should be adjusted in the previous quarter, but they have wrongly recorded in third quarter. So you are going to add back. Change in inventory valuation. Wrong effect. 10,000. 10,000 relates to previous quarter. Change in inventory valuation method is a change in accounting policy. So this is how you will do it. Tell me the total now. Let me take the total now. What is the total now? 1,02,000 was your profit reported, minus 20,000 extraordinary gain wrongly credited, add back, deduct it, and plus 10,000 is your change in inventory valuation. 10,000 wrong effect was given, so that comes to 92,000. This is how you will report the answer. The answer is presented in the book. If you want this answer, you have to practice. Okay, now write down homework. Practice in notebook. Answer I have given, because right now there is no need to copy the same thing. We can save time, but as a good student, after the class you will practice in the notebook, and you will write a note that change in inventory method is a change in accounting policy. Hence, it should be given retrospective effect. In the current interim period, only the effect of current interim period should be included, not the entire amount, of 16,000. So this is the answer. The student can check. We have written the same thing. And in case of change in inventory valuation, because it's a retrospective adjustment, you have to change previous year, previous quarter data also. So when you prepare year to date figure, that year to date figure will include 16,000 rupees loss due to change in inventory. I'm going to take one more important question for you. Question number 9. Question number 9. Priyanshi Limited is dealing in seasonal product. The quarterly sales data is given below. Quarter 1, 2, 3, 4. So most of the sale you get in third quarter, and in other quarter sales are low, 10% only. For the first quarter ending 31st March 2010, Priyanshi Limited gives you the following information: sales, salary, administration and selling expense. While preparing interim financial report for the first quarter, Priyanshi wants to defer 10 lakh expenditure to third quarter on the argument that this third quarter is having more sales, therefore third quarter should be debited by higher expenditure. Same problem which we did got repeated in May 2005 exam, RTP November 2010 exam. So you have to say this is not allowed. Even though it is a seasonal business, it is not allowed. The expenditure are uniform throughout all the quarters. This will not be allowed for annual reporting also. So question is, compute the result and comment on the view. Already done. You just have to take 70 minus 20 minus 2, and that will be the profit of quarter 1. So that comes to 48. Institute will try to think otherwise, but you have to be very firm. In interim period financial statement, we do not defer expenses if it is not deferred at the end of the year. Is it appropriate to anticipate or defer for the financial reporting purpose? The answer is no. So same thing cannot be applied for interim period also. Now we'll go to question number 10. Question number 10, RTP November 12, important. Again write down two things. One is homework and second is important. Kaveri Limited shows the net profit of rupees 5,40,000 for quarter 3 after incorporating the following. Profit already reported. Profit already reported, write down 5,40,000. Profit already reported 5,40,000. Bad debt of rupees 30,000 incurred during the year. 50% of the bad debts have been deferred to the next quarter. Bad debts of rupees 30,000 incurred during the quarter. Make it quarter. Incurred during the quarter. 50% of the bad debts have been deferred to the next quarter. Wrong treatment. Less. Bad debt wrongly deferred. 50% of 30,000 is 15,000. Wrongly deferred. Then next point is extraordinary loss of rupees 28,000 incurred during the quarter has been fully recognized in this quarter. Has been fully recognized in this quarter. Extraordinary loss, no adjustment. No adjustment because of correct treatment. It should be fully recognized and it is fully recognized. Hence no adjustment. It should be fully recognized. Everything is not wrong in the question. Now next point is additional depreciation of rupees 36,000 resulting from change in method of depreciation. Depreciation. No adjustment. Why no adjustment? It should be fully recognized. It should be fully recognized. As it is a change in accounting estimate. Okay, it's all printed in the book. So my revised profit before tax will be 5,40,000 minus 15,000 and that should come to 5,25,000. Okay, that should come to 5,25,000. Is the answer right? Okay, so try solving this question as homework in the notebook and mark it important. If the depreciation amount is fully recognized due to change in method of depreciation in the respective quarter, it is right because it is change in estimate. Whereas if it is change in accounting policy, then we are going to recognize only whatever is applicable for that interim period. So this is the answer of this question already printed in the book. Question number 10 is over. Question number 11, homework. Question number 11, homework. Now we'll come to question number 12. Question number 12. On 30th June 2011, X Limited incurred rupees 3 lakh net loss from disposal of a business segment. Also on 31st July 11, the company paid rupees 80,000 for property tax assessed for the calendar year 2011. How should the above transaction be included in determination of net income of X Limited for 6-month interim period ended on 30th September? Now be careful. This time the interim period is not 3 months. This time the interim period is 6 months. Okay. And what is the year ending calendar year? Calendar is 30th 2011. So let me first draw a timeline. This is a timeline. And the company's financial year is 1/4/2011 to 31st March 2012. The first interim period ends on 30th September 2011. This is your first interim period. This is your second interim period. There are only 2 interim periods. If it is a half year interim period, in a year there will be 2 interim periods only. Okay. Now see the event on 30th June. 30th June means somewhere here. X Limited incurred loss of 3 lakh from loss of business segment. Loss from disposal of business segment. Now this is a one-time event. Rupees 3 lakh loss. Rupees 3 lakh loss. Question is, how will the above transaction be included in determination of the profit of X Limited for 6 months? So the answer of this part is full loss of rupees 3 lakh will be included. Full loss of rupees 3 lakh will be included in calculating interim period profit. First answer is full loss of rupees 3 lakh will be included in calculating interim period profit. Full loss of rupees 3 lakh will be included in calculating interim period profit because it's a event or transaction which occurred in the first interim period. There is no need to defer, there is no need to prepone. That was easy. The difficult part is this one. Second part, also on 31st July 11, somewhere here, 31st July 11, company paid property tax 80,000 for the calendar year 2011. For the calendar year 2011 means for this property tax was paid for the period 1st January 2011 to 31st December 11. Okay. Now our interim period covers 6 months. So out of this 80,000, we'll divide into 3 parts. 1st January 2011 to 31st March 11, 1st April 11 to 30th September 11, and 1st October 11 to 31st December 11. This is our interim period. So this is 3 by 12, 6 by 12, 3 by 12. So that will come to 3 by 12 into 80,000, 20,000. This will come to 40,000. and this will come to again 20,000. Now the question is, how much property tax will be recognized for this interim period? How much property tax will be recognized for the first interim period? So the answer is, the property tax to be recognized for first interim period will be 40,000 rupees. So the answer for the second part, recognize property tax of rupees 40,000 in the interim period. I recognize 40,000 property tax in the interim period, but you have paid 80,000. This 20,000 is, you can say, payment for outstanding prepaid expense, outstanding property expense, because on 31st March 2011 there must be property tax outstanding for 3 months. Payment was made last up to 31st December 10. So from January to March property tax was outstanding. So this will be adjusted against outstanding property tax, and this will be treated as prepaid property tax for the next 3 months. 20,000 will be treated as prepaid property tax for the next 3 months. So that is the answer. For this property tax part, we can write a journal entry also. So if you are interested, I can give you journal entry for property tax. Journal entry for accounting of property tax. So we are going to first adjust against outstanding property tax. Account debit 20,000. This was outstanding at the beginning of this financial year. Property tax expense debit 40,000. Prepaid property tax account. This is for the next 3 months to bank 80,000. If you have to really understand in the form of journal entry, then this way you can pass the journal entry also. Is it right? So I have tried my best to explain this answer, and the detailed answer is printed in the book. Homework, don't forget, solve in notebook in your own interest. So many questions we are covering from different sources, so that in the exam you don't have a problem. Now the next important part of this chapter is how to compute income tax expense in the interim period. How to compute income tax expense in the interim period. Now, as you know, this is my financial year. Let us say 1/4/24 to 31st March 25. How is income tax calculated? It is calculated for the whole year. Income tax in India is not paid on quarterly basis. It is paid for the whole year. But for the purpose of accounting, I need to provide for tax expense. I need to provide for tax expense in each quarter. How do I estimate? So there is a process given by the standard, and we'll have to follow that process. What is the process? The process is, first things, income tax should be estimated by taking best estimated weighted average effective income tax rate applicable for the full financial year. So you have to basically compute at the end of each quarter what is called weighted average effective tax rate. You have to compute weighted average effective tax rate, and it will change every quarter also because the estimate of income can change, and the calculation of this will be based on estimation of your income tax liability for the full financial year. Will be based on estimation of your income tax liability for the full financial year. For example, your estimated tax liability for full year is suppose 25,000, and suppose your estimated income for the full year is 1 lakh, then your weighted average effective tax rate will be 25%, and you are going to apply 25% to the profit figure of quarter 1. Again when you will go to quarter 2, again you re-estimate your annual weighted average effective tax rate, compute the total tax liability for both the quarter minus the tax liability or tax expense of the first quarter. Okay, you will compute the tax expense on cumulative basis and deduct the tax expense of the earlier quarter. That is the amount you will charge in every subsequent quarter. Amount accrued for income tax expense in one quarter interim period may have to be adjusted. May means if your estimates change, have to be adjusted in a subsequent interim period of that financial year if the estimate of the annual income tax rate changes. And as you know, income tax estimation will keep on changing. It is not easy to predict the total income for the entire year. So every quarter sit down, estimate annual income, estimate tax liability, compute the weighted average tax rate, compute the cumulative tax expense up to the end of that interim period minus whatever tax expense we have provided up to previous interim period. That is how income tax expense will be computed. Okay, so I have given you few steps. You will follow those steps. Step number 1, compute taxable income for the year based on actual and estimated income. So you have to compute first taxable income for the whole year. Even though you are preparing the interim report of quarter 1, let us say on 30th June, you have to estimate total taxable income. You have to estimate total taxable income for 12 months based on actual and estimated income. What do you mean by actual and estimated income? If you are in quarter 1, so first quarter profit will be actual, other 3 quarters you will have to estimate. Then when you go to the next quarter, suppose now you are preparing interim report of the second quarter, you are in second quarter, so you will have to take first quarter profit actual, second quarter actual, third quarter you have to estimate, fourth quarter you have to estimate. So that is the meaning of actual and estimate. Whatever quarter you have completed, up to that take actual income, and whatever quarter are pending or whatever interim period are pending, take estimated income and compute annual taxable income. After computing annual taxable income, you compute tax liability on taxable income for the full year. So as I said, tax liability suppose for the whole year comes to 25,000. Taxable income for the whole year comes to 1 lakh. You compute third step, weighted average effective tax rate. This is called weighted average tax rate or weighted average effective tax rate. So what is your effective tax rate you are going to pay for the year is the tax on the taxable income upon your normal accounting income. Tax on the taxable income, that is what you have computed just now, divided by your normal accounting income. Okay, so that will give you weighted average tax rate. We are going to solve a problem soon and we are going to see how to apply this. Compute taxable income, compute tax liability, compute weighted average tax rate, and use this weighted average tax rate for calculating tax expense. If the company has deferred tax also, then the same process will be applied for deferred tax. You have studied deferred tax in AS 22, but fortunately deferred tax adjustment are not asked in questions of AS 25, but yes, they can ask you. It is a part of syllabus. Past data, this is past experience. Past experience is that the institute has never asked deferred tax adjustment while preparing interim period financial statement. So I don't know whether they will ask again or not, or whether they will ask in future or not. Never asked. So don't worry. Even in your study module, there is no question of deferred tax in AS 25. Even in the past exams, there were no questions where deferred tax calculation was required in AS 25. They will ask you deferred tax question under AS 22, which will be a separate question. Deferred tax we have already covered in your batch. Now next is special tax. For example, write down capital gain tax. Capital gain tax. So capital gain tax also you'll apply the same process, but usually capital gain tax may arise in 1 or 2 interim period, so you will compute only for those interim period. And mostly they will ask you regular tax, normal tax, but weighted average tax rate you have to compute if required for all taxes, whether deferred tax, special tax or regular tax. But for our exam purpose, regular tax is very important because most question will have this at least, and in some question you may have special tax like capital gain also. Step number 4, compute tax expense for each interim period. Compute tax expense for each interim period by multiplying tax rate of step 3. Okay, suppose in quarter 1 our PBT is 1 lakh and weighted average tax rate is 25%. So I will take 25,000. PAT will be 75,000. First quarter is easy. When I go to second quarter, suppose my income is 1,20,000. I will again compute weighted average tax rate. Understand? In quarter 2 also I have to estimate weighted average tax rate because the estimates of annual income, annual taxable income, annual tax liability can change. Suppose it comes to 26%. Suppose it comes to 26%. So what will be the tax expense of quarter 2? Tax expense of quarter 2 will be my total income, cumulative income of both the quarters, 1 lakh plus 1,20,000. Type on your calculator 2,20,000 into 26%. This is my cumulative tax expense minus 25,000 already provided in the previous quarter 1. So your answer will be 2,20,000 into 26%, that is 57,200 minus 25,000, and that is 32,200. So my PAT of the next year would be, second quarter would be 1,20,000 minus 32,200, 87,800. Okay, I will try one more. Suppose in quarter 3 my PBT is 1 lakh, let us say 80,000, and my weighted average tax rate calculation changes. My weighted average tax rate calculation again changes to 24% this time now. Quarter 3, I recalculated my annual income, taxable income, tax liability, everything, and now my weighted average tax rate comes to 24%. Question is, what will be tax expense of the quarter 3? So you will first take total income of 3 quarters, 1 lakh plus 1,20,000 plus 1,80,000, and this you multiply by 24%. This is cumulative tax expense minus 25,000, first quarter already provided, minus second quarter. So that will be my tax expense. So please come to 4 lakh into 24%. Total cumulative income is 4 lakh into 24%. That comes to 96,000 minus 25,000 and minus 32,200. So that will be 38,800. This will be your tax expense of the third quarter. Now this example I will solve again so that you will understand better. But in case of tax expense, we follow this process. We compute every interim period weighted average tax rate based on revised income, compute cumulative income multiplied by weighted average tax rate applicable for that interim period. You get cumulative tax expense minus tax expense already provided in the previous quarter. That will give you tax expense for the current quarter. And one student had asked me this question, it can be negative also. Yes, it can be negative also because you are deducting something. So there is a possibility that because of change in the information, you may get negative number. Don't worry, you can write negative number also. If this figure might be negative, you may have already provided more tax expense in earlier quarter, then it can be negative also. There are two special points. When you compute taxable income, you have to apply income tax rules. Under income tax rules, you get exemptions, apply that. You get deductions, apply that. So that you will be able to compute your taxable income and tax liability based on deduction exemption available for the full year. So your weighted average tax rate, in short, weighted average tax rate will take into consideration the effect of taxation. Okay, the effect of taxation. And secondly, same thing, if suppose the company has carry forward losses under income tax law, while estimating the tax expense and weighted average tax rate, we are going to also consider any effect of carry forward of losses. In fact, in short, you can say whatever exemption, deduction, carry forward loss which are allowed to be set off, you give the effect of this adjustment, then compute tax expense, then compute the weighted average tax rate and apply that weighted average tax rate. Okay. So let us solve one question number 13, and this will give you an idea as to how the interim period financial statements are prepared, and more importantly, how the tax liability for interim period is calculated. So students will pay attention. The answer is printed in the book. Homework: solve in notebook. And second thing, a note, very important question for exam purpose. Okay, an enterprise reports quarterly. At the end of quarter 1, estimate of the pre-tax annual profit was rupees 6 lakh. This is estimate of annual profit 6 lakh, and aggregate of deduction from gross total income under tax law was estimated at 1 lakh. So what will be my, suppose we are doing analysis of quarter 1, my estimated taxable income will be 6 lakhs minus 1 lakh is equal to 5 lakh. Okay, and what is the tax rate? Somewhere below 30%. So my estimated tax expense would be 5 lakh into 30%, that will come to 1,50,000. So what I'll do, I will compute weighted average effective tax rate. Weighted average effective tax rate will be my tax expense divided by normal accounting income, so which is 1,50,000 divided by 6 lakh, and that will come to, weighted average tax rate will come to 25%. Is it right? So my tax expense of quarter 1 will be 25% of first quarter income. The pre-tax income of quarter 1 and quarter 2 is 1.2 lakh. So 1.2 lakh is the income of the first quarter. So I will record a tax expense of 30,000. This is my answer of first quarter. Check the answer again. Your effective taxable income, estimated taxable income is 5 lakh. Estimated tax expense is 1,50,000. Weighted average tax rate is 25%. Tax expense of the first quarter is 30,000. Now I'll do the analysis of quarter 2. In quarter 2, now what is written? At the end of quarter 2, estimate of pre-tax annual profit was 6.3 lakh, and the aggregate of deduction from gross total income under income tax law was estimated at 84,000. Your estimates of income, your estimates of deductions have changed, no problem. So what will be my tax expense, estimated tax expense? Now I will say my estimated tax expense will be 6,30,000 minus 84,000. This is my taxable income multiplied by tax rate 30%, so that comes to 1,63,800, and my weighted average tax rate will be, formula is same, I am not writing. Tax expense revised estimated figure is 163,800, and my revised annual accounting income, normal accounting income, is 6,30,000. So that comes to 26%. Just check. Is it right? So that is 26%. Now the important question is how much will be tax expense of quarter 2? Tax expense of quarter 2, answer is printed in the book. My income of the first quarter is 1.20 lakh, income of the second quarter is 1.30 lakh. So 1,20,000 and 1,30,000. This is my cumulative income multiplied by 26%. That is cumulative tax expense minus this 30,000 above we have already provided in the first quarter. So you will take your calculator and multiply 1,20,000 plus 1,30,000 into 26%, that is 65,000 minus 30,000. So now your answer is 35,000. Now your answer is 35,000. That is your tax expense of the first quarter, second quarter. Okay. Now you will prepare profit and loss. So profit of quarter 1 will be 1,20,000 minus 30,000, 90,000. And profit of quarter 2 after tax will be 1,30,000 minus 35,000 is 95,000. I hope you have noted. So today we'll stop here and we'll continue tomorrow.